Rohan Mehta is with us. He's CEO and Portfolio Manager at Turtle Wealth. Rohan, good afternoon. Thank you for joining us, and season's greetings to you. Happy Diwali. Prashant this side. I think first time that we're speaking on the air. Tell us a little bit about Turtle Wealth and what you do, and because I have the fact sheet, but would love to listen from you. Because what I understand is you look at investing in turnaround businesses, but with a quant mindset. So just the process, if you can explain. Go on.
Yeah, hi Prashant. All the viewers, happy Diwali and New Year, and thank you for having me in the show. So 15 years, 17 years, we have made some processes where we have seen a great research that how we can make, a long-term wealth and what are the credentials of picking up the stocks which can create an exceptional wealth creation point. And that's where our 16 to 17 years, we have invested in a lot into the quant making process that how to pick up the companies. And in that, we have found that the best wealth creation happens into turnaround businesses, but turnaround businesses picked up not by emotion or by just intuition, but rather than purely on the data making process. And that's where we have created a specific quant into three areas of businesses where is the selection, allocation, and reviewing of a stock. Because generally we talk a lot on allocation or rather selection of a stock, but very less on allocation of a stock and nearly about nothing on how to review a stock once it is allocated. So that's where our, the fund works onto the process. We feel much ahead of a time, but I think so that's where the world is going onto quant-driven process rather than emotional-driven process.
Sure. If you can be a little more specific, say for example, the reason I'm asking is if there's a turnaround stock, usually you'd want, which means you'd buy in early, right? Something is down 30-40%. And things are changing. I mean, that is, or if you by turnaround, you mean something else. But that's typically what our viewers would understand with turnaround. But when you apply quant to it, which is, mathematical things like, well, outperformance to a certain index, I mean, those things won't show because, it's at a trough. The stock's not running away. It's not, no one believes it. So how does the two square? Go on.
Yeah. So turnaround doesn't mean buying up a stock at 20-30% downside. Rather than it's the different way around what we have picked up. To buy companies which has not done anything great from last decade, but at the same time the stock has PAT has been rising from last 15 years. And we pick up the stocks only once the stock crosses all-time high, and that's where the whole quant changes the game. And if you have seen in last 30 years, the best wealth creation stock is when the company has not performed or a sector has not performed for a longer period of time. But at the same time, the revenues have come up higher, but the pricing have not been discounted. And there can be a re-rating in that sector. And that's where I can give you an example in 2022, could be an auto or a PSU in 2021, or maybe in 16 chemical story. These are the sectors where 15-20 years nothing had happened. And the first indication of a stock to do turnaround is when it does an all-time high after a longer period of time. And second indication is that when the company is making a consistent all-time high profits. And the third indication is that when the company does an outperformance to its index, because that's where we buy stocks, right? We want an outperformance to index. We don't want an underperformance to index. So there are a lot of credentials to this for sure. But if you look forward for what are the top three credentials, defining all the 500 credentials, what we have done into a research, we have found that these are the three key credentials to find out a turnaround. Three key credentials to find out a turnaround story. I can name a lot of companies into the point, but rather I can put it on the sector. And the sector comes down a very interesting sector that would be auto in last 2 to 3 years.